What's up everybody? Welcome to the Stocks channel. My name is Cory and today's special update will be why the stock market is more bullish than you think, and I'm going to give you many charts that are completely objective on why the stock market is likely about to go into a bull trend. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so this is going to be one of those special updates that I typically do in the Stocks channel Discord. So if you like this video and want to join the Discord server, you'll be able to find out how to do so by clicking on the link below. So the first chart I want to look at is a weekly chart of SPY, and I want to show you that we are in a very bullish pivot on the SPY weekly chart because we were seeing selling going down on decreasing volume, and you could tell by these weekly bodied candles that the selling pressure was dying off as we approached SPY 380 support, and then the volume started to pick up as we started to bounce from that support, and now we are at a decision point in the market where SPY simply just needs to break above $400 and we should be in a bull trend. You could tell from these weekly candles that we were getting more bullish as we accelerated up from 380, and then we did find sellers at that bear market resistance trend line at 400, but you could see the last weekly candle is a bullish hammer because as we approach support down here right around 387, we found buyers yet again, which means the buyers came from 380 up to 387, which means we are putting in a higher low. So the higher low means the buyers are getting more and more aggressive, and they are very likely going to outnumber the sellers as we see SPY breaking out above 400. So you instantly need to get more bullish if we see SPY breaking 400. It is that simple, and it is 100% objective that if SPY is above 400, you instantly need to be a lot more bullish because this is a very bullish weekly chart. That means we are likely going to much higher prices. Alright, the next chart I want to go over is from Macro Charts, and you can see the Twitter handle in the bottom right of your screen. And this is a very good example of when everybody gets way too bearish, we are typically much closer to a market bottom, and this is exactly the condition we currently find ourselves in. You don't have to look very far to find the loud bears that are screaming this market is about to crash and we're about to go much lower. And if you look at other times in history when we've had that bear bull spread, we have typically seen the market bottom right before a major bull trend. So do understand we are in the same exact condition coming out of the bear market of 2022 where everybody is extremely bearish and everybody is extremely pessimistic and nobody thinks it is possible to ever see a bull trend yet again. Now if you go over to the bear bull survey, you can see as of last week we are starting to see a lot more bulls entering into the arena, but we still have 36% of the people that are sitting in cash and 33% of the people that are bearish. When there is a lot of pessimism and a lot of people sitting in cash and we start to get that bull breakout above the bear market resistance trend line, there is going to be a lot of panic buying as people FOMO into the market, and that is going to give legs to the bull trend because a lot of that cash is going to come flooding into the market once we get the confirmation of the breakout. There will also be people shorting the breakout that are going to get squeezed, sending prices higher. So this is the perfect catalyst if we get the price action breakout to send the stock market much higher. The next chart I want to look at is a daily chart of Bitcoin because Bitcoin is a very risk-on asset, and if you draw a bear market resistance trend line from the all-time high to the lower highs, you can see that Bitcoin is now getting a bull breakout, and this is the third day in a row of confirmation of a bull breakout. So this does look like the real deal breakout. Even if Bitcoin backtests the breakout as support before it goes any higher, there is no way objectively looking at this chart you can say that Bitcoin is not breaking out bullishly. And this is an extremely risk-on asset, so if Bitcoin is breaking out bullishly, it is very easy to envision why the S&P 500 could be breaking out bullishly next. Remember that Bitcoin is one of the most speculative assets that you could possibly buy, so if Bitcoin is breaking out bullishly, that is an extremely good risk-on sentiment indicator, which means that we are likely to see risk-on sentiment in the rest of the market as well. The next chart I want to look at is a chart of the VIX because last year while we were in the bear market, we saw the VIX continuing to put in higher lows, and you could see a very clear shift in the VIX going back through August of last year that we are now putting in lower lows and the VIX is continuing to break down below 20. VIX below 20 typically means there's not a lot of fear in the market, and that is more indicative of a bull trend market while the VIX is trading below 20. So the longer the VIX spends time below 20, the more likely we are going into a bull trend. And you can see the VIX has been spending quite a bit of time below 20 going back to December, and we are currently breaking down below 20 yet again as of the close on Friday. So the lower the VIX goes, the more likely we're going into a bull trend, and right now you can see the VIX is very clearly in a strong downtrend. The next chart I want to look at is a chart of EWG divided by SPY, which tells us the German market is absolutely wrecking SPY in relative performance, but I do not expect this to last much longer. The German stocks have been in a bull trend for many weeks now, and they are clearly outperforming SPY, but there is not a good chance that that is going to last for much longer, so I am looking for SPY to start outperforming the German stocks, relatively speaking, in the very near future, which means we're likely going to see SPY breaking out. If we jump over to a chart of EWA divided by SPY, this is the Australian market compared to the S&P 500, and we see very similar outperformance, and we can see that EWA SPY is looking like it's finding resistance at a double top, which means we are very likely going to see SPY also outperforming the Australian bull market as well. So if Germany and Australia are in current bull markets, it is very likely SPY is just lagging behind because there's no chance the US market is going to relatively underperform some of these other foreign countries' stocks for very long, because the US market is typically where investors go to look for the most positive returns. Even if it's just in the short term that we're underperforming, it is not likely going to last. Furthermore, to prove this point, we could look at the emerging markets ETF divided by SPY, and we could see the same exact relative outperformance where SPY has been underperforming the emerging markets. And again, this is not likely going to last for much longer. So those are three charts relative to SPY of exactly why SPY is very likely going to rip through the bear market resistance trend line and start trending higher. Next up, we can look at a chart of DXY, which is the US dollar index, and we can see that the US dollar is currently in a downtrending channel ever since we broke the bull market trend and back tested that breakdown as resistance in November of last year. And ever since, the dollar has been in a very powerful downtrend, trading below a negatively sloping 20 daily moving average, and a weak dollar is very likely going to be supportive of a bull trend in the stock market, and we can see the US dollar is still looking very weak at this time. Jumping over to the US 10-year yields, we can see we also had the same exact breakdown that we saw in the dollar. We broke down through the bull market support trend line, and we are very clearly in a downtrending channel, trading below a negatively sloping 20 daily moving average, which means we're seeing the 10-year yields heading lower. If we jump over to the US 2-year yield, we see the same story of breaking down below the support trend line, backtesting that support trend line as resistance, and continuing down into a downtrending channel, trading below a negatively sloping 20 daily moving average. The next chart I want to look at is a chart of XLF, which is the financial sector, and we can clearly see the financial sector had a bull breakout above the bear market resistance trend line, and we are currently now trading above a rising support trend line, which we just back tested as support on Thursday and had a very high volume bounce back over a rising 20 daily moving average. So we see a downtrending US dollar with downtrending yields and a rising financial sector above a rising 20 daily moving average, and you can see underneath the surface we are in a very healthy market where the financials are doing well in a bull trend, breaking out of the bear market resistance and currently above a rising support trend line. So then if we go look at the overall breadth of the market, we can see that over 50% of the stocks in the stock market are above their 200 daily moving averages. And if you just draw a trend line, it also looks like that is also breaking above a bear market resistance trend line and currently trading above a rising 20 daily moving average, which means of all of the S&P 500 stocks in SPY, over 50% of them are currently in bull trends, trading above their 200 daily moving average, which tells you the breadth in the market is looking a lot more bullish this year. So to pull this all together, if you take all of the charts that we just went over, there is a bullish undertone in the market as we are approaching the bear market resistance trend line, which means if we do break above that resistance, you instantly need to become more bullish because we are very likely going to go into a face-ripping bull rally. Keep in mind, this is 100% objective, and it does have the requirement that you have to see SPY breaking out above 400, because the only way this happens is if SPY breaks resistance. So as a trader, you have a very clear objective breakdown that you need to see in the price action. And if you do not see that, then you simply don't take the trade. So in a world where everybody is bearish and everybody can see all of the bad in the market, there's a lot of people that are doubting the bull market, and that is the perfect recipe for a bull market, because a lot of bull markets are built on pessimism. When nobody sees one coming is usually when you're going to get it. So if you disagree with me, that is 100% fine, and that is what makes markets work, because there's always going to be people that can see both sides of the trade. But the only difference here is that if SPY breaks above 400, you instantly need to be more bullish because the charts are clearly telling you something else is happening. So that's how I see it. If you want to leave a comment below of whether or not you agree with me or whether or not you see something different in the market, I will happily read your comments. But this is exactly why I think too many people are bearish and why I think the market is going to be surprising a lot of people in the coming weeks. Also, check out in the description below, I have a trade alert service that only trades ETFs TQQQ and SQQQ, and I also have the Stocks Channel Trading Discord community. So if you're interested in joining any of those, you can find out how to do so by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.